the age of institutional adoption will be not just buying it in their portfolios, but treating it as a separate asset class in their portfolios and reallocating capital away from asset classes like bonds. The unfortunate reality is that most people are sheep. They just want to go along with the herd because it's safe, and very few of them are willing to go out of that and risk being, ostracized by doing something that's so different. We're just getting to that doorway now. It's open. It's very easy for institutions just to come in and buy Bitcoin through an ETF, just like any other stock. They can buy it through the same trader, settle it the same way, custody it the same way. They have the same legal structure around it. It's very simple for them now. We're just getting to that doorway now. It's open. It's very easy for institutions just to come in and buy Bitcoin through an ETF, just like any other stock. They can buy it through the same trader, settle it the same way, custody it the same way. They have the same legal structure around it. It's very simple for them now. There's no difference really between buying a gold ETF and a Bitcoin ETF. One difference though is that they can't margin the Bitcoin ETF. It's just not available yet. But so now you're going to start seeing that the innovative, the progressive, financially progressive institutions that are willing to go out a little bit out on the risk curve and say, okay, well, what is this thing? We're going to add 1 or 2% to the portfolio, 0.5%, 1% to the portfolio, and then that's called dipping your toe in. But now you own it, and you have to make a choice, because you're going to wake up every single day and you're going to see it on your portfolio. You're going to see it in your sheets, and you're going to go, okay, I got to figure out, do I want this thing or not? Because that's not a full position. It's just like it's just a toe. So do I want to actually jump in this pool? I got to dig in, and it's going to annoy you until you make that decision, either clear it off your sheets or start buying it in earnest. And so we're right at that point where we're going to start hearing of more and more institutions that have taken a little bite. They're checking it out. Now they have to do their work, and then they'll start really allocating to it. And then, the age of institutional adoption will be not just buying it in their portfolios, but treating it as a separate asset class in their portfolios and reallocating capital away from asset classes like bonds, where they understand this is a real true store of value. Now I'm going to take this allocation I have for long bonds, which I, for the life of me, cannot understand why anybody would have, own 30-year treasuries, but even 10 years, reallocate that to this stable store of value that I can trust is going to hold my value against massive money printing inflation in the future. I need to have that as a core position. That's the true adoption. That's where we're headed.
I feel like their experience has been Bitcoin is this very stupid digital rock Ponzi scheme bubble. It's like if you mention the word Bitcoin, they just like laugh and think you're like an idiot. Yeah. So like, do you think that still exists today? Do you think that that's changing, or have you had that experience?
As more money comes into Bitcoin, that risk is decreasing, that it's going to continue to be volatile. But anyway, I had some personal capital that I wanted to allocate, and I thought, well, I want to go out on the risk curve here. What's this Bitcoin thing? I think there's something there. And so I did as you normally do. I went around and asked my peers and the experts on the street, really the technology analysts and portfolio managers and hedge funds, and they're like, every single one of them was like, even if they said I own a scrap, but I got it years ago, it's just it's not worth anything. There's nothing there. Yeah. It's really just a Ponzi scheme. There's no inherent value, and it's going to go to zero likely. So I wouldn't do that. I was like, oh God, thank you so much for warning me off from buying Bitcoin when it was only like $3,000, $3,500. It was so helpful, but that's the attitude that you still see. People are like, 60,000 for a pet rock.
Yeah.
Why would you buy that? But it goes to your first statement. Like they just don't understand it.
Mm-hmm.
They have no idea. They look at it and they say, well, there's no difference between this and Dogecoin. And the thing I always get, which is, well, why wouldn't somebody just make a new and better Bitcoin? So my mission at first was to kind of teach people about it. And it gets tiring that there's the unfortunate reality is that most people are sheep. They just want to go along with the herd because it's safe. And very few of them are willing to go out of that and risk being, ostracized by doing something that's so different that people are like, ooh, why are you involved in that? Are you a drug dealer?
Yep.
And so it's personal reputational risk. So, it's still taking time, but I believe that tide is absolutely turning. Mm-hmm. And I know it is because I'm getting more and more calls and messages from my old world. They're like, hey, what's going on here? Like, what should I know? What do I need to know? We have if you want to talk about the real pandemic here, we have a pandemic of inability to critically think. So we have lost in great numbers of I would say not the youngest generation, because they're waking up, but there's this whole generation. There are a couple of generations that are just unable to critically think. They just go along with whatever they're told. And we know how centralized the media footprint is and how easy it is for them to just be fed and regurgitate. I would say there are messages, right? And then that kind of turns into a theme. And that theme is the narrative. You hear like, oh, the media narrative. Well, they're just giving you snippets and it becomes that narrative. Mm-hmm. And so, but people, it's easy for them to connect those dots that they're being fed and regurgitate. I hear it all the time. I hear it from intelligent people that they just stop critically thinking. They're like, oh, it's too, just tell me what I need to know. Mm-hmm. And so that's the epidemic. Fortunately, we go back to the fourth turning, where there is chaos in the money supply and pain, which I don't know that that's going to happen. Like every single turning looks a little bit different. Some people would argue that we're already in a world war. It just looks different than it did before, and if you listen to former intelligence officers, they'll tell you like, look, we're right now we're fighting proxy wars all over the place. And so when those proxy wars become something greater, well, then you have the chaos at home. But right now, the United States is involved in a bunch of proxy wars. Mm-hmm. Okay, so why does that matter? It matters because of instability, of the geopolitical instability. And so my concern is that chicken comes home to roost here in the dollar and the strength of the dollar and the money supply. Because when you get to a situation where we're in so leveraged, Joe, from the small, retail consumer all the way up to the sovereigns, we are levered to the gills. Mm. We can still add more leverage. Like I talk about the debt spiral and how there's no turning back from our debt levels from where we are right now. It would be extraordinarily painful to turn that back. There's two ways that could happen. You can either have a catastrophic event where you have a treasury market that just goes no bid, because of loss of confidence, or because just suddenly there's something going on in the markets that draws all liquidity out. And so people aren't out there buying anything. And so, it draws out the liquidity, or something happens where you have just a large group of investors that are not willing to buy treasuries at the price that the treasury needs them to buy them at. Mm-hmm. They're like, no, we need that interest rate to be way higher because there is so much uncertainty here.
Mm-hmm.
That's one. You could either have that, which just means more money printing. So you just have that, right? So you have that drawdown that looks probably much like 2020 when we had our lockdowns, but it would likely be steeper and faster.
Wow.
So, and that would be very painful, short term.
Yeah.
The other painful thing would be, and that would be almost impossible at the time. I mean, you saw how difficult was that time, March of 2020 to April 20. It was like, wait, what? We just printed out. Like, the second thing you could do is just allow for massive inflation, just massive nominal GDP inflated, and to pay down debt, to pay down old debt that, this is emerging market kind of stuff where you don't have. I've been saying for a while now that I do expect us to have a period of inflation that's going to be much higher than they'll either admit or that we saw this last cycle.
Mm.
It could be 12, 15, 20%, or you could have this cycle, which Luke kind of believes, where we have massive inflation. Like you're talking like, 50, 100% inflation for a period of time, and it just pays it all down, right? So will they let that happen? Well, I don't think they want to, but it could be unavoidable because of how we're set up with our spending, and we're fighting these wars, and we're, so like, how, if you get in the situation that the United States just has no choice but to print another 10, 20, 30 trillion dollars, what do you think is going to happen to the dollar and the treasury, right?
Yeah.
So that will wake people up, and it'll come back to the money supply being broken and it being painful for them, and saying, I need someplace else to store my value. Now, this is a very US centric answer. There are plenty of countries around the world and people around the world that they're experiencing something entirely different than the United States is, where a place like Egypt and Lebanon and Venezuela and Argentina, where they have had such gargantuan bouts of inflation that you literally you walk into a restaurant and they're changing the prices between the time you sat down and the time you're leaving, because the inflation is happening daily, and so they're not just looking for, oh, I need to protect my money. They're looking for, I need to have someplace where I can put my money where it doesn't just evaporate, get eviscerated.
Mm.
And if there becomes great instability in my country, how can I take what I own with me? Well, we've talked to some of our friends here in the Bitcoin community who have fled those areas, and Venezuela, for instance, and gone to Canada,
mm-hmm.
and with nothing but their clothes on their back and the seed phrases for their wallet.
Yeah.
And they were able to transfer all of their wealth from one country to another without ever moving anything.
Yeah.
Because Bitcoin is everywhere.
Yep.